What's up, ladies and gentlemen? It's your favorite mentor, your one and only Forex hero. As you know, guys, I go by the name of Ofentse Ledwaba, and I'm the CEO and founder of Forex Heroes. Today, guys, I'll be sharing with you the hacks and tricks of how you can be able to double your small Forex account. As you know that not many people are very fortunate to start with a large amount of money getting to the Forex trading. But without wasting much of your time, please, if you are new and you're not a subscriber, you know what to do. Click the subscribe button, click the like, and click the notification bell so that you get notified every time I drop. Let's come back to the topic that I mentioned. You need to understand that the money that you are putting into Forex is the money that you are willing to lose. So once you put your money there, you know that you are no longer having that money, you understand? But I'm not saying risk recklessly. What I'm saying is that prepare your mind that the money that is in the market is no longer yours. With that being said, you don't get emotionally attached. It's not easy. It comes with practice. You must understand that. Obviously, everyone is attached to their own money. We know we work hard for money as much as you can try, but it comes with practice and practice, not an overnight thing that you can be able to understand that you can indeed get detached from the money that you put in the Forex trading. One thing that you need to do when you are trading, wait for the right moves. Don't have FOMO, fear of missing out on trades. Don't have that. You need to wait for the right entry before you can deposit. A simple hack that you will have, let's say you have 10,000 rand. Don't deposit the whole 10,000 rand. Take half of it, put it aside, and use the 5,000 rand. There's no guarantee that you will win all your trades, but by you dividing the large amount of money, I would say it's because 10,000 rand to other people is a lot of money. 10,000 rand, which is also equivalent to $400, it's a lot of money to some people. So you need to understand, once you put half of it there, you know that you have the remaining half. Then you know that you can risk $400 or 10,000 rand. You know that with this 10,000 rand, that's the money that you can be able to risk. Whenever you are putting your trades, trade with caution, apply risk management. Don't say this is a definite trade, I'm gonna go all margin in, putting all your money into one trade. Learn to diversify, learn to spread your risk evenly. For instance, trade 3 to 5 pairs each week. That way you know that whenever you are trading these 3 pairs, and if out of these 3 pairs all of them are in losses, you get an opportunity on the 4th pair. You don't take that, you will only take it once you see you are winning on these 3 trades. And on these 3 trades, when you are winning, you scale in, you add more orders on the winning trades. That's the hack that you have to apply. Add more trades to the winning trades. I hope that is clear. Don't add your trades on pairs that are in loss. That way you are increasing your loss. You are guessing or you are gambling. Learn to understand the method of scaling in. And once you've been trading, and then you double your account. Here's the trick, how I managed to capitalize on the market. I withdraw my initial deposit. So now I will withdraw my 10,000 rand or my $400, put it aside. Now it's back into my bank account. Now I have the profits. With these profits, now I can be able to maximize potentially. Maximize, like go in heavily, because that way I know that I'm risking the profits from the market, not my initial deposit. My emotions are detached. I have got my money back from the market. Now I'm safe. I'm having the whole of my money in my bank account. Simple thing. When you are putting your trades, when you add your trades, as soon as your trades get into profit, what do? You break even, put 0-0, making sure that you don't lose. If the market decides to come back and hit your stop loss, then so be it, you look for another entry. But that way helps you because now you are maximizing, you have increased your lot size compared to the previous time. Understand? You must understand that you will use 0.01, maybe 3 orders or 4 orders, and then once they're in profits, you scale in. Now you go with 0.03 or 0.05, knowing very well that the trade should go in your favor and you are being backed up by other trades. You have something like this. You have small lot sizes and then bigger lot sizes. You know that these ones are the ones that you're gonna be able to capitalize and maximize, and also they are the first ones that you will take profit, because you don't want the market to be pushing up and come back and touch them because they are higher than these ones. Understand? So as soon as the market pushes up, you put in 0.0, knowing that you are protected. As it goes further up, you put 0.0. If the market is coming from the top and then you are selling, the first one will be the one with lower lot sizes, and then when the market goes in your favor, you scale in with more lot sizes. That way you'll be able to maximize your profits, and also keep on moving your stop loss so that you get maximum profit. If the market decides that after 100 pips now it decides to retrace, you'll get at most 90 pips. Don't go to an extent of leaving a bigger room, like if the market is at 100 pips and then you put in your stop loss at 60 pips. No, maximize by all means necessary. Take what the market is giving you. Don't let the market give you and then take back again. With that being said, by you understanding your risk management and following your trading plan, you'll be able to overcome and grow your account into bigger, because you'll be able to understand compound interest. That's what forex trading is. You compound interest. You put in money and you trade it to increase it into a large amount. You're not gonna put in your money today and expect it to be $1 million tomorrow. It's step by step. And also, once you understand the psychology behind it, many people will have the right strategy, but they are struggling with the risk management and the psychological part. The psychological part involves detaching your emotions from the market. You cannot put in a trade and then be a zombie and look at the laptop the whole day. That's what most people are making a mistake. You should be able to risk the money that you are willing to lose, put in a trade, and then leave the laptop and come back after 4 hours. That is the safest emotional way of trading. Learn to put in your TP and your stop losses in place. You cannot trade without a stop loss. If you are trading without a stop loss, you are setting yourself for failure. You must know where the market reaches this level. That is a cutoff level. And if you are a beginner, you must understand that if you are putting a stop loss in a sense of a trend line, you just put it there and then you say, I'll close. As a beginner, it's not easy because you are not trained. Your mind is thinking money. I'm losing. You become emotional and you say, okay, fine, let me leave it. Maybe it will turn. There is no maybe, there is no buts. If you are wrong, you are wrong. Learn to accept your wrongs. The good traders accept their losses quicker and they cut them short, and they let longer winning trades run for longer. That way you'll be able to increase and capitalize on your wins. But if you keep on letting losses become bigger, you are setting yourself to blow an account. Week in, week out, you'll keep on blowing your account because you are hoping the market will reverse and come back in your favor. The market doesn't owe you anything. You must remember that. You will apply what we predict the market will do. We don't force the market. If the market turns, if I had a setup that was saying I'm going to be buying, then I'll see the market is reversing, it's selling now. I will sell. You will follow the market. We follow what the market is doing. We don't force the market to turn or the market do what we want to do, because you must remember the market doesn't see your trend lines. The market doesn't see the patterns that you draw on it. The market doesn't see your supply and demand, but the price knows where it's gonna turn. So you need to be aware of that, as it can set you for failure. You need to understand the differences of gambling and trading cautiously. Always make sure you put in the money that you are willing to risk, because what you put into the market. If you know that you're no longer attached to that money, you can trade with ease. I'm glad you guys could join me today, and I'm glad I could share with you the hacks of doubling your small account into a big account, triple it, and making it a bigger account. It's your favorite mentor, your one and only Forex hero. Catch me in the next video. Peace.